Today's top stories at NBR: some tourism businesses' revenues slashed by 90% since March 2020. Too Cheap Cars claims it's well placed for growth. NZ Refining launches $43.5 million capital raise, and there's more coming right up. Kia ora and welcome to NBR Today, a wrap of the day's top business stories from the authority in New Zealand business news since 1970, nbr.co.nz. It's Monday, November 29th. I'm Paul Brennan. Thanks again for joining us. The Financial Markets Authority, FMA, is taking a hard line on unregulated investment funds offering attractive returns to investors under an exemption in the law. The regulator has given promoters of the products barely a month to come up with extensive information about how they market them and to whom. There's been huge growth in syndicated property and agricultural funds offering 8 to 10% returns as an alluring alternative to low-yielding fixed interest investments. All the offers take advantage of a section in the Financial Markets Conduct Act allowing promotion to wholesale and eligible investors. All the offers take advantage of a section in the Financial Markets Conduct Act allowing promotion to wholesale and eligible investors. Investments can be offered without the usual disclosure requirements that underpin regulated retail products. Aotea Gifts Director Richard Hansen has been operating a business with revenues slashed by 90% since March 17, 2020. The business, which prior to COVID had 10 stores across the country and 200 employees selling New Zealand-made products to international travellers, has become 8 stores with 20 people. The hundreds of small local businesses supporting Aotea Gifts have suffered as well, as have landlords relying on rents from this and other such businesses. Tourism and travel has seen some 225,000 workers pre-COVID reduced by 40%, and revenues, which used to account for 20% of all exports, slashed by half across the board. As the Bank of New Zealand chases expat businessman George Kerr's defunct company Pine Holdings for a debt of $67.7 million, its investee company Pine Group Corp has filed accounts indicating a 27% fall in net asset value. Exactly how much Pine Holdings owns of former NZX-listed, now Guernsey-registered PGC, has been the subject of inquiry by receivers. Kerr, who is said to be living in Europe, is managing director of PGC and reported to shareholders the company expected to reward shareholders for their patience as the investment strategy reaches maturity. PGC's net assets attributable to shareholders as of June this year were £31 million, down from £42.4 million a year earlier. The NZX-listed owner of second-hand car dealer Too Cheap Cars is claiming to be well placed for growth after COVID-19 lockdown restrictions yet again hampered its financial performance. NZ Automotive Investments, which also operates vehicle finance company NZ Motor Finance, today, Monday, said its net profit after tax in the 6 months ended September 30 was $1.4 million. That was down $500,000 on the previous year and at the lower end of guidance it had provided in September. Revenue was up 2% to $31.2 million. NZ Refining has launched a $43.5 million capital raise to fund additional storage capacity following its final decision last week to convert Marsden Point Oil Refinery to an import terminal. The NZX-listed company, which is being renamed Channel Infrastructure from next April, went into a trading halt today, Monday, as it announced the equity raise to fund expansion in private storage services. That followed the company's board confirming it would convert to an import terminal after it reached agreements with key customers Z Energy, Mobil and BP, as well as obtaining shareholder approval at a special meeting in August. Today, Monday, NZ Refining said in a statement to the NZX that the contracted private storage capacity would require initial investment of around $30 million and was expected to result in incremental revenue of about $50 million on a fixed rental basis over a 10-year term. NZX-listed aged care provider Oceania's first-half underlying earnings have risen 19.7%, with strong pre-lockdown sales carrying some momentum through the Delta lockdown. Underlying EBITDA for the 6 months ended September 30 was $36.5 million, up $6 million on the corresponding period, while profit after tax was up 48.9% to $36.94 million. Revenue of $113.94 million was up roughly $10 million on the comparable period. In this instance, the previous half ended on September 30 due to a change in balance date. Oceania Chief Executive Brent Patterson said before the Delta lockdown started in August, sales volumes were strong and development activities were progressing well. The full details of those stories and more are at nbr.co.nz right now. Tomorrow at NBR, in Margin Call, Hamish Pepper from Harbour Asset Management, while in our weekly entrepreneur slot, we talk with a self-taught cybersecurity entrepreneur who's trying to get more women into tech. I'm Paul Brennan. I look forward to being with you again from around lunchtime tomorrow for the morning's NBR trending stories. Then same time, same place, again right here tomorrow from 5:30 for another NBR Today.